high. We've already had this 50% pullback actually. So yeah, I'd be looking for any pullbacks really to just buy, whether it be back in this zone or back in this 50% level. Again, very simple stuff. Check gold. We've done gold, so I'm just gonna, oh wait, hold on. Just seen, we've got Chris to take over the show, so I'm not gonna start a new chart. I think that'd be unfair on him. Guys, don't leave when I leave. Chris is coming to take over. You're in great hands with him. Have a good one. Thank you for having me as always. Enjoy the rest of your day, and we'll speak very soon.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. What is happening, everybody? Happy Thursday. Markets are going to be closing up early today. Markets are bullish. Here's the rip. Non-farm payroll up for the week. I mean, again, big week, and honestly, most of the direction is on today's gap. To me, this has a little bit of like a blow-off move. There's the low of the week. It's up around 1.5%. Seems like it is bigger, but that's just because we had the gap higher today by like 0.3, 0.4%. I'm looking at a trade this morning that as long as I stay above this yellow box, I've got some profit rolling in. I'm in some profit now. I'm trying to hopefully see it get into some of these resistance levels. 62.75, 62.80, possibly a run into this is like an August gamma level at 6,300. I don't know if we're going to hit that so early, but we're about to find out. On the day, I would expect today's high to be maybe around 62.85 to 62.90, just based on the VIX. So I may, two things. One is price runs up into my levels. I'll probably take the profit out of this trade versus letting it go all the way to expiration today, which is around 1 p.m. Eastern time when everything settles. And then two is if I'm willing to have the courage to short by the end of the day, maybe I try to short like a 62.90 or 95 and see if I get a couple bucks out of that as well. Probably not necessary. It's been a good week. Overall, like fresh highs in the portfolio. Had a bunch of winning trades this week. Just closed out a nice winner on the QQQ. Took a 111 on the QQQ, which was way down here. Basically, that was a bear put spread with a naked put, and I pulled in about 90% of that max credit. Made about $154 on that trade. I mean, overall, like no complaints. Up on the day, P&L's looking pretty good, and I just continue to monitor my expirations and watch. So this is the trade I'm talking about here. Up around $40, and hopefully you'll see $50+ shortly. I might let it go a little bit longer, but I'm okay with just taking the profit, moving on with like a 15% winner. So I'm not surprised that the market's just taking this all in stride. The news this morning, non-farm payroll numbers came out pretty solid. Forecasted for 111, came in 147. The average earnings wasn't super awesome. I mean, 0.4 previous, now 0.2, but unemployment rate went down to 4.1. Jobless claims also a little bit better at 233. So, more data next week. One thing I do want to bring your attention to is how this market has run for a lot of days since the trade war, the ceasefire. Okay, so this little pop here from this low to high, it's up like 5%. And this market has made like a 5% move, 5.5% move since the ceasefire announcement. The ceasefire was this gap, right? So from this low to high, we have 1, 2, 3, 4, 5, 6, 7, 8. Today's candle number 9 from this push. So 9 candles, 8 of which are bullish, pushing the market up about 5.5%. Okay, so great. But now what? I think we have a pullback. And, when... Well, I found an interesting spot here. You remember what happened last summer during July? Okay, last summer, July, we had, this would have been the pullback. So we got into about the halfway point of the month, and then by July 15th, 16th, we topped out. We ended up going lower to finish up. Look at the month of July. Let's go monthly candles. let's go July of last year. Let's go back a couple of Julys. Let me go to a blank chart so this is a little bit easier to read. Okay, so let's go SPX monthly. April, this is 2024. So here is July. So I'm just going to highlight this candle. So we started out 5470 all the way up, faded back down. The market finished, pretty quiet for July. But that started off with a ton of volatility in August. I mean, the monthly chart doesn't really show it or give it justice because we did have a high to low, which was around 10%. That high to low move was 9.7%. We topped out. We had the SOM rule activated. The Bank of Japan was, kind of deleveraging. That was the trade heard around the world there for a couple of weeks. But the market bottomed out August 5th and never looked back. Okay. So my point is, are we going to, finish July with a big green body, or is it going to be some volatility going into July, August? So that would be, last year had correction written on it from the halfway point of July. Let's go to 2023. July 2023, there's May, there's June, there's July. July 2023, just a bullish month. 4445 up to 4494. That was a July move of around 3.25%, 3.33%. So just a pretty steady month. And then August, September, October pulled back in 2023. So look, I mean, if we don't have a pullback starting in July, I would be incredibly surprised to see August, September, October of 2025 not offer some reasonable, if not meaningful, pullback. Truly. So, look, we survived April. May melt up on the hard pivot. June, just more of the same. Trade war agreement, trade pause. Nothing's being said that's negative. We have a ceasefire agreement coming in, June, and then July is just a bullish month. So there we are. So do we hit some levels here like end of July into August, September? I mean, where we are for the year so far, I believe, I'm not mistaken, we started the year off here. So here's January. So right now we're looking at year to date. S&P's up around 6% year to date. Okay, QQQ. Started out, here's January. A little bit more volatility on the Qs, but the Qs are still up around 8% for the year. So still single digits. But the U.S. is now kind of reestablishing like, hey, U.S. has some growth potential. Does the world benefit from it? Yes, no, maybe, probably. Here's DAX. Let's go year to date. I'm just curious now if the U.S. is catching up with some of these other non-U.S. plays. January still up. I mean, it's still up a lot. January had such a big rip non-U.S., that big rotation. We're still up around 20% on the DAX. So the S&P and the Nasdaq both have some big catching up to do to match what the German DAX has done so far. Look at the FTSE. Similar thing. Here's January. Obviously, tons of volatility in April, but that January out of the gates was such a big rip that we're still up around. Well, I guess FTSE's not as good. DAX is up 20+%. FTSE's up 8%. How about China? China for January, right here. China is up around 20, almost 21%. So China doing well. Germany doing well. Let's go India. Let's go top 50 India. Okay. Started here, was down about 9%, fought back, it's up 5%. Does India have what it takes to get up to highs again? Possibly. So here's where we started in January. If we get to the all-time highs, that'd be India up around 10.5%. If I go to Brazil, so EWZ, I'm just looking non-US. Starting in January, right here, you can see a nice start to the year. Brazil for the year is up 30%. Emerging markets have come out swinging this year. I mean, pretty much at a low. This was a good spot. I mean, I've owned EWZ into the low 20s. Obviously sitting on drawdowns for a while, but doing okay. And now ILF, Latin America, same thing. Started here in January, up around 26, almost 27%. So not all things are crushing the U.S., but DAX is doing pretty well. Eurostock's doing pretty well. FTSE's keeping pace with around 8%. but the U.S. is climbing. U.S. is climbing, looking better, looking more resilient. 6% in the S&P, 8% in the Nasdaq. The Dow can still play catch up. The Russell can still play catch up. Market breadth is looking a lot better. S5. There we go. There. Let's go to the daily. Okay, market breadth here. So almost 75% of stocks in the S&P are above the 50-day moving average. Let's go weekly chart. Okay. Another thing that I'm curious, like, does this push up enough to give us a bit of a pause? Right? Meaning, like, does every stock show up like, hey, 91% of stocks are above the 50-day moving average? Well, is that a timing indicator to short the market a little bit? Maybe start locking in some profits, and maybe start moving some stop losses. That has been a pretty good timing indicator for at least some locks, and then you can obviously buy some more dips if you're still liking the trajectory. But remember, we got a great opportunity here during the scary times in April to buy the market. I was just hoping that we had a chance to buy the market, which we did. This is why I was selling a ton of premium in April, but I was hoping we had a time to, sell all that premium, get a dip, and then go with it. But instead it was just here and off we go. Like a lot of stocks just did that, right? Meta did that. Microsoft did that. I mean, a lot, they all did it. Like Palantir, Carvana, Hims, like they all had crazy lows, and they just ripped all the way back to highs. It's fine. I mean, you can't time the market perfectly. It's really challenging, but I can't complain about making money. It's just I'm sure like everybody else does, like, oh, I wish I could have been more aggressive. Well, yeah, I wish I was too, but I didn't know the severity of a potential global trade war. To me, this doesn't feel like COVID. Like COVID was like a 10-year discount offered in a month. So I bought everything. And once we got out of that, then it was easy to hold on to those positions a little bit longer. It doesn't make me feel warm and fuzzy to hold on to positions right now. What makes me feel warm and fuzzy is making sure that I've got good positions. I'm playing with a wide margin for error, and I'm still generating income and gains, and lowering my cost basis and just doing better portfolio work while having potential downside risk, but also watching hedges turn to crap right now. Like all my hedges are just worthless. But they're there if I need them. They're out to December. I'll hedge again into next year. We'll see. But anyway, market breadth wise, maybe this is a bit of a timing indicator. If we hit 90+% of the S&P above the 200 or the 50-day moving average, if we start to see a lot, I mean, another major indicator would be here. If we somehow see that above the 200-day moving average, 80+% of stocks, between 80 and 90% of stocks on the 200-day, like that is top city 101. Like we're going to start to see some tops here. It wouldn't surprise me. But more importantly is bottoms. Like these bottom indicators have been so good for timing the market over like a 30 to 60-day window. Nasdaq is about 77% of stocks on the Nasdaq above the 50-day. And on the 200, we got a big thrust above the 200. Here, the last 2 weeks of trading, we're getting a lot of movement in tech, a lot of movement in Nasdaq. So 73% of Nasdaq stocks above their 200-day, which shows some pretty good market breadth for the stock or for the tech side of things. And then above the 200-day on the S&P is about 59%. Okay. Meanwhile, take a look at your indexes to catch up. Dow doing some quick work here the last couple of weeks. I think this is also another reason like the markets continue to melt up higher. The Dow has played catch up where we're nearly back to all-time highs. So again, right before that ceasefire agreement, the Dow was at 419. Now it's at 447. This should be, I think I have a couple 1-on-1s. I don't know if I closed these out yet. Let me check. I think I did. I've got some shares. That's up. That's fine. So, okay, I closed out my 1-on-1s. I had a bear put spread plus a naked put that was down here to like 385. And I closed out like 90+% of that max credit. That'd be almost like 100% as this thrust is happening. The Russell also making a higher high. We're at 222, and I'm just doing boring old stuff like selling covered calls. So I've increased my profit potential on the Russell by $2.05. It's fine. Let's take a look at the heat map today. We've got 63, almost 64% of stocks in the S&P advancing today, led by some familiar names. You're seeing a lot of green in the tech space, semiconductors, Mag 7. Big enough stocks. When you got the big boxes on this heat map, those are your market caps. So, I mean, Microsoft is green, Nvidia green, AVGO top 10 over $1 trillion, Apple, Amazon, Tesla flat, but Tesla had kind of a volatile week. It was down 5%. It was up 5%. Financials doing well today. What's down? I mean, we got some chop going on in healthcare. UNH, where's UNH at? UNH is still up 311. I've got a 260 ratio spread on that one. Industrials, aerospace doing pretty well. There's Boeing up to 216. GE Aerospace, RTX. So, where's any like shining red sectors? Not really. I'd say real estate's down slightly. Anything on yields today? So yields are up for the last 3 days. And we have TLT bonds are down. This was a discussion I had yesterday in class. So I sold another leg of my diagonal spread for 89, going out to, I think, the July 18th expiration. I'm just going to keep lowering my DLT trade. Mag 7, Mag's up today. Possibly, I mean, maybe this gets up to all-time highs. Maybe Mags gets all-time highs. Apple's looking better. We've got 3-4 days in a row in Apple. Amazon back up to intermediate highs. Broadcom right back up towards highs. Google hanging in there. A lot of resilience at the 150 mark, which is where I have my ratio spreads, 135 and 100. Meta just off of all-time highs. Microsoft still climbing higher. Netflix with some overbought conditions, likely. I mean, I'm guessing that we're going to have a dip or a pullback, that Netflix is still a good buy. It's just I'm not super stoked about trading other than like a controlled defined risk spread. Buying shares of Netflix would be fractional. It's like I'm not interested in, buying 100 shares at $12.95. So if it splits, maybe, but I don't know if it's going to. So until then, like any dips and pullbacks, probably fractional ownership of Netflix. Nvidia, we did a pretty good job like clearing this 153. I mean, what a comeback in this stock, huh? One of the biggest companies in the world, having an 85% rally. And you look at this price action, like this is the type of stuff that was tricky for everybody. This market was up, down, and there's your breakout, and it never pulled back. Like if this is a cup and handle, you go up, you go down, you break this handle, you measure the move. Like all it did was pause. Like we didn't have a pullback. It didn't go, pushing up here, then pulling back again, then pushing up here, like that kind of typical wave structure you'd like to see. It was, once it was up here, all it did was pause. And then it was higher and higher and higher, and it's gunning for all-time highs, and it got it, and it exceeded it. I just took profit on my SPX trade this morning, so I'm going to close that one down right here. That is 10:38 a.m. Eastern time. $585 credit, closed $535 debit. So that puts me at, for the week, what was this week's trading? The 30th. So 1, 2, 3, 4, 5, 6, 7, 8. 8 for 8. Not bad. All right. Tesla 314. Kind of choppy, kind of sideways, but the good thing is we are on the right side of the trend line. Tesla, typical price action is probably going to look something like that. Very volatile. Nobody really knows what's coming next, but if it catches bid, Tesla looks pretty good. What's the next big thing? Robo-taxis, humanoids, profit margins. I don't know. I mean, we have earnings. I think they're in either late July or August. It's going to be July 23rd. So that's going to be something to pay attention to, along with other Mag 7 earnings. I think that Mag 7 earnings have to do pretty well for the markets to really embrace, like, we got another quarter of higher prices. Okay. But meanwhile, I mean, the premiums are still pretty good. I own shares at like 230, and yeah, I mean, my cover call is not great. I mean, 230, I've got calls at like 265, 260, 275, 280. I'm just continuing to roll them because if price is going sideways, it just gives me time to kind of catch up on the covered calls. I'm not letting the stock go. I want to keep the stock. I want to keep rolling it. I'm way in the money on those covered calls, and I'm going to continue to do that. I'll just keep rolling it and get an extra somewhere between like $2 to $3 every couple of weeks. Berkshire Hathaway. I mean, it's interesting. We're sitting at all-time highs. Berkshire's not quite there. I don't mind this trade, like a defined risk Berkshire trade. Let me see if this actually pays pretty well. I don't want to own the shares. So a credit spread's kind of out of the question. A ratio spread is kind of out of the question. Maybe look at a debit spread here. BRK. If I go Berkshire B, if I were to buy, let me see, a debit spread. I'll try to split this like a split spread. So if I went out through earnings, August 15th, I mean, I think it's subject to like the markets pulling back, but maybe going out to the end of the month, August 1st earnings, July 25th, August 1st, maybe this pops up here. Okay, so if I buy like a 480, sell the 490, I'm trying to get like some equal, so I'd have to pay, I mean, I pay 588 to make 10. I don't know. I'd almost rather do like a butterfly spread. Let me see 1 second here. Butterfly call spread. If we can hold, I don't know if the premium is going to be good in this or not. If we can hold like the 475 zone. So we hold 475. You're going to charge me a debit for this broken wing butterfly? You've got to be kidding me. Oh, never mind. Put spread, duh. I was like, what is happening? Let's put this down to 75. All right, so I get 40 cents on that trade. Maybe there. You know, it's like, do I love this trade? Not particularly, but if we stay above 470 through August 1st, I can still make 70 bucks on the trade with a profit trap of $500. So, you know, that gives us a little bit of buffer. If price were to drop, let's go down to 470. We've got a $5 profit trap by August 1st, which is earnings day. That'd be below this recent low. I don't know. I mean, it's, if it was a better, like this is not great premium. You know, only pulling in 68 cents is not that exciting. If this was like $1.50, maybe more willing to take that trade. It's about the only way I'd think of playing it though. Otherwise, the call side, you're paying more in premium than you get in a reward. So pulling in some credit, having a profit trap, going out a couple more weeks might not be terrible. I don't know. I like it, but probably not enough to take the trade right now. All right, let's talk some other stuff. Let's talk dollar index. Let me double check my calendar. All right, should be good. Okay, dollar index. As I said, don't keep shorting the dollar. I think it's going to catch a bid. We pretty much hit the measured move. This yellow box represents the symmetry on that major swing. This isn't something I'm just like, hey, buy the dollar. I don't like that. I don't like the dollar. What I like instead is don't short the dollar. Wait for this thing to show a little bit of a relief rally, maybe a 100, maybe a 101. Look for confirmation to fade this and roll this thing over. Okay, I still think the world is loving the weaker dollar. I think that's probably why we have so much of the risk appetite hitting the markets right now. But I just think this is a silly trade to be forcing a short. We don't typically see currency markets that act so permanently one direction. So if this is oversold with some divergence and it's crowded, then we're probably going to have some type of squeeze. From there, let's see if we can hit the daily 200 moving average area and then roll over. And then, yeah, we can resume the sell trade. Get down to 90. Like, I'd love to see a target at 90 on the dollar. There's a lot of pip opportunities there. But I'm just not going to sell the dollar at these lows. I've been cautious of that for the last couple weeks, right? You go to Aussie dollar, it looks like it's an open space. I'd still be looking for some type of pullback around like 64 to 63.50. If you go to euro dollar, we hit highs around 1830. I think this pulls back into maybe retesting, 1570, maybe pulling back deeper, maybe a 13 to 1200 test. I wouldn't really short this until we have better price pattern at the top. If this comes down, maybe you get some type of like wedge formation and then it breaks the trend line. Maybe that's a good opportunity there. Or it just kind of rolls over. If it rolls over on the trend line, pulls back a little bit, fade the backside of that trend line, short the neckline, measure the move. Nothing magical, just good technicals, waiting for some confirmation. Okay. And I think if you're doing that, risk, having a stop loss plan is probably wise. Pound dollar started a bit of a pullback. We had pound weakness yesterday, but again, nothing that's shown a break of the trend line or break of structure. So maybe this kind of the same thing like this. Maybe a rising wedge rolls over on the right side of the trend line and just a pullback, like take a low, take a high, look for some simple fibs. 38 or even 30. 30 is not a fib, but 30 is a GAN level. 30%, 50%. Easy, like easy money if it gets there. I just want to see if we can sell it nice and high. New Zealand dollar. Same thing in Aussie dollar. I think this has good open space to the upside. I like this trade going up to these highs. Okay. But having the charts look something like this, maybe a pullback into 59.50 to buy small. We pull back into here, I'd still be willing to buy more with a stop loss below that level. But I think the dollar, especially if there's risk on in the markets, I would think that Australia and New Zealand do pretty well with risk in the market, risk on trading. Dollar CAD, 135.88. I'd like to see if the dollar CAD can settle into like the 134.3 or 2 handle. I haven't looked at oil in a second. Dollar Swiss, just off the lows. I'd like to see a trend line break and maybe a pushback into this pocket around 87 to 88. A lot of that's going to be either dollar catches bid, gold falls a little bit, or the Swiss at 0%. Maybe there's a bit of a carry trade going in with a lower volatility forex market. But we still have to break this trend line. Dollar yen, no trade. Dollar yen, if you're lucky, you're getting some structure in here to buy low, stop loss, see if it wants to run up and hit maybe 148, 149. This is going to be a very noisy zone if you ask me. I still think this ends up heading down to 140. I think it breaks 140 eventually. This trade might take a year or two, but if we break 140, I think we're going to 120. 120 on the dollar yen seems like a very doable target. I just don't want to sit here and force a trade with negative swap for however long it takes. There's going to be a little bit more timing involved, but when it does go to 120, it's going to be fast. If we break 140, expect it to drop to 120 pretty quickly. I'd say within maybe 3 months. But we got to get all that confirmation line up first. Okay, currency strength on the day. Let's see. Yesterday, CAD was strong, pound was weak. Today, it is dollar, CAD, pound on top. We got the Japanese yen weaker. Currency-wise, still pretty contained. We haven't had like a big blowout day in currencies for a while. That's probably our bigger move on just the pound yesterday, but I have not seen 100+ on this vertical axis for months. Probably the last time we did would have been during all the drama in April. So, Forex has been pretty tight trading and much less volatility. Doesn't mean there's not opportunities. It's just a lower volatility environment. So, anywho, that's that. Oil. Finding support around 65. Okay. I don't know what's next. I honestly don't even love trading oil. I'm just saying from the trade that I am in, it's a CL trade, so oil futures, and my line in the sand is 50. I think the trade is looking okay. Technically, it's like it might be down in the drawdown position, but Yeah, I'm down $50. It's like I should be making about $220 on the trade. It's out to the end of the year. It's defined risk. I mean, if I make $200 on it, cool. That's $200 on 15 accounts, so it pays pretty well. But that's essentially saying that oil is going to stay above $50. Time will tell. Natural gas. Natural gas is becoming probably the go-to for this whole data center build-out. A lot of companies, energy-wise, are tapping right into natural gas pipelines. I know nuclear is a big talk as well. Nuclear is taking off in a big way. I closed out my shares of URA, which is uranium. I put on some ratio spreads on Oklo. There's some other ones you can follow along with that are benefiting. But I do have a diagonal spread on UNG. Let me find it here. So the 5x17, we're trading at 15.34. This is only out to the 11th, so this is technically next Friday. I'm just going to keep selling calls. So I mean, I've got this one out to January, so I just need to be a little bit more aware. Like, we're at the halfway point of 2025. I can't get too cute with this thing. Like, I'm going to try to sell it at 17, my break even on the trade. Let me go to my tracker here. So UNG. My break even on the trade is 14.45. So if push comes to shove, I can just sell a $15 call and let it get called away for a couple of bucks. But ideally, I'm trying to make $2, $3, $4 to the upside, lower my cost basis. But after the 11th expiration, I mean, you can see here, like, I'm up 94, 95% of the profit. It's probably better for me, more capital efficient, rather than waiting for the extra $8 here, is just roll this. So let me see what this looks like. I'm going to do this right now. If I roll this July 11th, $17 call, I'm just curious. Like, I'm up 95% of the profit right now. If I roll it, so if I roll it out by 5 days, I'm only getting 7 cents. I've got to go out a little bit further in time. 12 cents for a week. Maybe out to the end of the month. August 1st, like, this isn't bad. If I roll it out to August 1st, I get 61 cents. So I can decrease my cost basis down to like $13 and change. Give me a break even on the debit of around $8 and change. And then I'd have a, deep in the money call with a break even around $13 and see if I get it called away at, $17. So can I get like 60? I'm gonna try 65 cents here. Not filled at 65. Maybe 60 cents. Is it worth it? Not getting filled. All right, I'll come back and revisit this one on Monday. So anyway, that's just natural gas. I mean, I think natural gas should be going higher, but if we're just tons of demand, this could be, pushing prices back down. It's just disappointing to see this thing rip off these lows and then have this consolidation. I'm hoping that this is actual structure that's changing. Like, this low, this high, this is a higher low. So I'm hoping that this is consolidation and UNG catches a bid to the upside. Now, if I get it called away, like as it's ripping, that's fine. I'm still making income, but perfect world would be like, I don't have anything in the way and this rips up to like $24 again. But to be determined. I'm also happy just actively taking profit if I'm, making whatever, maybe $3, $4 a contract, and I've got 2,000 shares worth. So all right, that's that. UNG, gold, everyone's favorite. Gold is at 33.25. If I'm going to add more to gold, I want to see something in here. If I'm adding on gold futures, adding on GLD, adding any on pullbacks, I want to see a pullback to like 3150 or 3000. 3150 or 3000. I've got naked puts on GLD. I'm willing to own the shares. I just haven't added much to it. If I like to speculate on gold, I like to use gold futures. I just want a better setup. So if we get a pullback, I'm going to use GC to then buy the dip. I'll add shares with GLD. I'll add debit spreads. I'll add naked puts, whatever. I just haven't done it yet. So a lot of consolidation on gold is totally fine. We're in the middle. I don't know if this is going up or down. I don't care. I know that if it comes down, I'm interested in buying dips. If it goes up, I'm going to enjoy the ride. Silver, I still think is better. And hopefully silver will be clearing some highs here relatively soon. I'm going to move this chart alarm up to this high around 37.36. Edit that. Message would be fresh highs. fresh highs on silver, hopefully. SLV, same thing. Measured move all the way up into the 40s. All-time highs on this SLV up into the 50s. Go to the weekly chart. 2011 should have been the all-time high. Yep, so right around $48. I'd love metals to go up 44%. Silver is definitely one of my bigger positions. SLV right here, up around 38,000 bucks. GLD, probably a fraction of that because it's not as large. I took a lot of profit on GLD last year. Here's GLD, up around $17,000, $20,000. I've got CEF, another kind of play, $5,000. PHYS, add into the mix, that's up $4,000. So I mean, there's some money there. IBIT, this is Bitcoin. We haven't really cracked highs recently. IBIT is where? 62. So we're up to some fresh highs, up 60 grand. But anyway, that's silver. Let's go Bitcoin. Bitcoin's up to 109. Still, the fresh highs are what, 112? All-time highs. We breached it here. That high I'm showing 112 on the nose. So is this it? Like, are we making a run? I don't know. I mean, if we breach the highs, I'm not like super excited about that. But obviously, if it goes and it runs to 125, 130, I'm not going to be complaining. I just wondered if we have a bit more time to accumulate. So is it, sideways here, and maybe it's a chance to participate, maybe it's a chance to accumulate, and then we break and go higher. I mean, coming back down to this level would be a great order, but it'd be like, why? Why would it come back to 75,000? So it doesn't seem to be the case. Risk on trading. If we get risk on trading and this breaks highs, it'd be interesting, like through this tax bill, especially if the U.S. passes a tax bill, adds $2.4 trillion to the deficit over 10 years, weakens the dollar, loss of purchasing power, inflation goes up. Does Bitcoin catch a bid from that? Maybe. So it's certainly behaved a lot differently. There's way less volatility on Bitcoin than there was in the past. This has done a pretty good job of playing catch up this year. Like gold was outpacing Bitcoin by a ton, and then all of a sudden Bitcoin caught up. So I still like it. I'm still bullish. I'm up a decent amount. I'm still going for higher highs. MicroStrategy up to 407. This is good. We've got a chart alarm set at 430. Got a bull call spread that should be paying pretty well. MicroStrategy now. Bull call spread, I needed it to be above the 390 level. So it's up just over 100% of my debit. I paid $350 for it, but it can make up to $1150 in profit. So I've still got another $600 or $800. I guess about $800 to go if I want to hold it. So I mean, $400 profit, $400 profit, $380 profit. If we stay above 390, then yeah, I mean this pays out $1150 by January. So I'm hoping that we do make all-time highs on Bitcoin, and as a proxy, MicroStrategy is clearing these highs as well. I'd be happy making $1,000 on that. Not bad. Coinbase, just crazy move on the stablecoin announcement. Dodged a bullet here with the April drama. Made a lot of money on Coinbase. Just income trades. Didn't own any shares. Didn't buy any shares. Just a lot of ratio spreads. A lot of debit spreads. But what a surge. So any pullbacks in here? I mean, I think this looks pretty good for pullbacks and positioning to stay bullish. This is like the genius bill passing the stablecoin stuff. Or I don't know, be careful, I guess. If it comes into a halfway point, maybe this is a broadening pattern. Right? So if it comes in the halfway point, maybe positioning for owning shares down here. I would own some Coinbase. The premiums are pretty good on it. So if I did a ratio spread like a 150 by 145, stay out of the way, generate the income. If it goes back up to highs, that's easy. If it goes back down, I could take the shares and flip it, repair it. I've got the capital to do that. So I'm not going to do that trade now because we're sitting at these highs. But if we came back to like, let's say 275 or so, we set a chart alarm 275 and look at ratio spread with April lows. Okay. See if that's the play. Let me take a look at fundamentals on Coinbase. Okay. That's not good. So we're trading at 354. Fair value, the discounted cash flow model is 141. Again, I mean, it doesn't mean anything, but it just makes me a little bit more apprehensive. Like, I don't need to buy stocks that are that much more expensive than what they possibly should be for fair value. But as we all know, like, there are stocks that can run way higher than price to earnings, higher multiples. People just pay an arm and a leg for them, and they still go up. But it's kind of not really my preference. So I'll probably just stay out of it. Or if I do own the shares, it's going to be like fair value or lower, right? Like, the nice thing is the premiums are pretty good. What else? Copper. Dr. Copper looking alive and well, meaning the global economy is still showing some risk on trading. Japanese yen. This, honestly, like, this might be another like good opportunity, but let's say that Japanese yen is sideways here. I might want to get long in the futures market. I don't know how far can I go out on Japanese yen futures? Let's find out. 6J. How far out can I go? March of 2026. It's not far enough. Trying to think. Let me go FXY. January 2027. Is it possible to have something dirt cheap like FXY if I could buy like the $66 call? Okay. So I could pay, $540 for a trade that by January of 2027 is hopefully up here towards $74. So question is, if we go here for $17 and I pay 17, I mean, that's a 340% profit. Okay, that's not bad. But is that enough time in the trade? I mean, that's essentially saying I think that the Japanese yen is going to get stronger, blah blah. If I want to make it cheaper, then I trade that time and I go all the way out here to 75 or 74, and I buy the dirt cheap. Like, I buy this for $200. Well, this $200 can become, I mean, it's probably not the best trade to do it structure wise, but this could become, same thing, like $1,700 for a $200 risk. That's pretty good reward to risk. Like, that trade is worth it. It's just the timing of that. It's got to be pretty perfect. And I think the easier trade is, I don't know if this is a big if, but if the Japanese yen gets weaker, maybe we hit this low and find support. Maybe we break this structure. We start to, I mean, once we're here, this becomes a pretty bullish trade. Japanese yen futures becomes a pretty bullish trade. Currencies probably moving high volatility on the Japanese yen strength. I just don't know, if we see it. What I'm saying is, if we're going to participate in the Japanese yen, I want to do it with like no swaps. So I don't pay a commission. I don't pay a fee on buying FXY. I would pay a fee if I did a 6J, which is Japanese yen futures, but that's a one and done. There's no negative swap on that trade. So anyway, I will wait. I'll kind of wait this out. If the futures contracts go out longer, maybe, but probably the cleanest way to trade it with the most time horizon would be FXY. Cheapest way to trade it, still get the benefit of a Japanese yen move. EWJ, that's Brazil. DAX is up. I'm long the Fez. FTSE, I'm still looking for a pullback here on the FTSE. Now we're getting into our Mag 7s, which we talked about earlier. Bonds, TLT, 10 years still up. Okay, I know Trump is very vocal to Powell right now, cutting rates. I mean, today I saw the headline, Powell's costing us $900 billion in interest rates. Listen, dude, if we cut rates by another 75 basis points and these bond yields go up by another 75 basis points, like, Trump is going to look like an idiot. He'll never say that. He'll never admit it. But if we have the bond market do the exact opposite like it did last September, this is another reason the Fed is not touching anything right now. Okay, I mean, we will know more the end of July, because after July, which is another pause, September's action time, and there's no meeting in August. So if you go to the watch tool here, go to the watch tool, go to probabilities, 95% chance that July 30th is a nothing burger. They just pause. But it's the language of that might trigger something. Okay, because we don't have an August meeting, but does the market move to price in something? I think that this rate cycle has already been priced in. Okay, so September, is this back to a, what the fudge? I'm looking at here like this is switched a little bit. This was a cut for September, cut for October, cut for December. Now it's looking like that's getting pushed out into cut September, pause October, cut December, and then maybe cut January as well. Either way, like we're getting 3 cuts at least from the look of it. Obviously, that can be something that changes, subject to change. But I don't see Powell bending over backwards to appease Trump when the reality is the bond market is going to be what ultimately decides what the Fed's going to do monetary policy wise, I think, because if the bond market is going to react adversely to this and yields go up, I don't know if this takes some of the shine and some of the awesomeness away from equities. I mean, if this year, like the S&P's up 6% and you can somehow get 4.5 to 5% with virtually zero risk, why would you not do that? So unless the equities market this year has just another gangbuster, like 15, 20+% year, that obviously makes bonds feel like garbage. But if yields are up and people can take risk-free returns at 5% or 5+%, it's hard to say when the equities market averages 7 to 8% a year, why that would be any better. So anyway, we'll see. But the big trick for the bond market this year is, will the Fed be cutting and will the bond yields go the opposite way? So if the Fed cuts rates, official cash rate goes down, yet yields go up. That's not a good sign. That's the backwards that we saw in September last year. We're no better off. I think the lowest mortgage rate we saw here was around 6%. Now it's 6.7, 6.8. That's the average mortgage. So unless housing prices are coming down, unless we start to see some real fragility in the labor market, these are just things we got to be watching. It's certainly not enough to break the market. I mean, the reflexivity of the market from those April lows is as good as I've seen since COVID. I just don't know if we're going to continue this crazy melt up. Different environment. But I'm not bearish. I just would like a pullback. Or we get into just straight up bubble territory and I'm just like, fudge it, I'm shorting this market now. We're not there yet. Like for me to say I'm shorting the market, we got to be pushing 6,500 in a straight line. We got to be pushing 7,000. Then I'll start talking about shorting the market, just because it's ridiculously overbought. But that's not there yet. So anyway, all in all, price today pretty darn easy. It was nice to see a directional day, grab some profit. This was done. I'm out of there with some profit this morning. If we go up to, I'm going to look at like this 90 to 95 handle. I'm going to maybe put in a sell trade at like 95 to 3, maybe the 90 by 6,300. Take a look at this today. SPX for today. If I could do a 60 to 90 by 6,300, if I can get filled for $5, I'm going to take that trade. Okay, so I'm going to put that trade in. It may not get there. We'd have to go all the way up to like 93, 94, 95 today for that to have a chance. And honestly, the market closed in 2 hours, so it's highly unlikely that gets filled. But I'm just glad that I traded the market directionally today because it has been nothing but bullish. However, caution for next week would be the following. This will be my last little segment here. We have had 9 candles up. Okay, 8 of the 9 being green. Directionally, even this one, even though we gapped higher and faded, this is a pretty good cycle where if you're following 7 to 11 candles, 8 to 11 candles, typically in like a stochastic cycle, this is an up move, and then the stochastic starts to turn down. So a pause or a pullback I could see happening, sooner than later. But honestly, if we don't go anywhere other than up for July, then August, September, I would say buckle up for some volatility because we got to get something. I could be wrong, but my gosh, man, like we pulled back in 2023 in a big bull market. We pulled back 10%. 2024, we pulled back 10%. Like this, like sometime July, August, September typically equals some type of pullback. And given the volatility that we've seen this year, it wouldn't surprise me to have like a very challenging, fast, aggressive, like 5 to 10% correction that nobody's going to want to see. Who knows what the news alignment is going to be on why it's happening, but something to pay attention to. Okay. So, all right. I think I'll let you go for today. Enjoy the rest of the short trading hours. It's markets closed at 1 p.m. Forex should be open tomorrow, but otherwise we'll pick things up where we leave off on Monday next week. All right. Take care, everybody. I'll talk to you soon. Thanks. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.